Hi, welcome back to my channel. If you are a returning subscriber, thank you so much for subscribing. If you're here for the first time, here we talk about money matters, how to make money, how to save money, and how to accumulate money. So in this video specifically, I'm going to take you through why you need to have a money market fund account, the benefits of MMF. Are they investments or are they savings? So if you're here for the first time, kindly press the subscribe button so that you don't miss out on the videos I will be uploading. Now, what's a money market fund account? An MMF or a money market fund account, it's a unit trust, yeah? It's a pool of different investors, you, me, and other different people who bring our resources together and give them to a professional fund manager to invest our monies collectively in short-term, highly liquid, profitable securities. It's a pool of different investors who bring their resources, their monies, of course, when we make deposits, yeah, to a fund manager, and the fund manager invests these monies collectively or these resources collectively in short-term, highly profitable, highly liquid investments. So what are the benefits of having an MMF? Why do I need to have an MMF? Like I have said, they are highly liquid. So MMFs are a good investment vehicles. It's a good place to have your emergency fund accounts. Remember we said emergency funds are money you keep aside to use whenever you have an emergency. So MMF, because you don't know at what point your emergency might strike. Can you imagine if you have your emergency fund stored in a circle, and when you have an emergency, you go to the circle and request them to access your savings, and you're told you need to wait 60 days. Some emergencies cannot wait for 60 days. So your emergency funds should be in a highly liquid place. And MMF is one good such account that you need to have to store your emergency funds. MMFs gives you returns on investments, or it gives you return on your savings. There's a school of thought that argues that MMFs are not investments, but MMFs are they are investments. So MMS it adds you some benefits, some interest. You can earn some passive interest from MMF. All right? At the end of the month, your fund manager will be crediting your account depending on your interest circle, on that specific fund manager's interest circle. Your fund manager will be crediting your account with interest that the fund manager will have earned you from the investments or from the deposit you have put in that MMF. Another advantage of MMF is that the starting capital is very minimal. So it's an investment that it's open for everybody across the economic divides. If you have 1 million, you can have an MMF account. If you don't have 1 million, but you have just 500,000 shillings, you can have an MMF account. If you don't have the 500,000 shillings, but you have just 100,000 shillings, you can have an MMF account. If you don't have the 100, but you can afford 20K, you can have an MMF account. If you don't have the 20K, but you have 5K only, you can still have an MMF account. How about when you only have 1,000 shillings? You can still have an MMF account. What if you don't have the 1,000 shillings even? You only have 100 shillings account. 100 shillings. You can still have an MMF account because there are MMF accounts, there are fund managers that allows you to start with as low as 1 100 shillings. So it's one of the investments that has a low starting capital. With just 100 shillings, you can have an MMF account and build it up over time. Now, another advantage of MMF, or why you need to be having an MMF account, is the compounding effect. MMFs provides the compounding effect. Compounding effect is when money you have already earned earns you more money. When you recapitalize your income, you recapitalize the coupon, you recapitalize your return on investment so that you can broaden your principal, you can broaden your initial investment using money you have already earned, so that what the next month when you're being paid a return on your investment, you have a broader base on which interest is calculated. Remember, interest is a factor of principal, interest rate, and time. So when you started off with 10,000 shillings and you're earning interest at 10%, and then your account is credited, for argument's sake, with 1,000 shillings, that's a figurative figure, yeah? The next month, this MMF will now be earning you interest not on the initial investment of 10,000 shillings, but now on the increased investment of 11,000 shillings. And on month 3, your MMF will not be earning you income on the initial investment of 1,000 shillings, neither will it be accruing on the increase of 11,000 shillings, but now on the increased amount. As it earns you interest, it increases, it recapitalizes, quote unquote, it recapitalizes that interest so that it has a bigger base on which your interest is being calculated. Like I have said, interest is a factor of principal, which is what I'm calling your base, interest rate, and time. So MMF is a good avenue to compound your wealth. Another advantage of MMF is diversification, risk diversification. Like we've said, MMFs invest in different investment vehicles. So you can choose an MMF that invests in the investment vehicles that you are keen on investing in, but you might be lacking the knowledge and experience to go into that market. For instance, shares or commodities. All right? So you can choose a fund manager that operates or that has those underlying assets that you are interested in. But MMFs are good. It's good in diversifying your portfolio. Diversifying your portfolio could also be in the angle of having had a SACCO account, having had for your wealth accumulation and for loans, easy access to loans, having had your bank accounts for your regular transactions, having had your bonds for your wealth accumulation, and then you have your MMF to meet your other finance goals. So it's a good source of portfolio diversification. It also encourages a saving culture. When you have your MMF account and you keep depositing whatever little amounts you have into the fund, it feels so good at the end of the year when you look at your statement, your transactional statement, and you see at the bottom how much interest you'll have earned at the end of the year. It's a motivation to continue saving. It's when you're going for your December holidays and you know you don't have to enter into your pocket to go for your holiday, the interest you have earned from your MMF, assuming you have not been drawing January to December, will be sufficient. Another advantage of MMFs is they are regulated. They are regulated by CMA. But that does not necessarily take away the risk of low performance or other risk, because institutions which are regulated, like for instance banks which are regulated, like Imperial Bank, were put in receiverships. SACCOs, which are regulated by SASRA, has been put in receivership. Insurance companies, which are regulated by IRA, has been put in receivership. So yes, they're regulated, but that is not really the main benefit of having an MMF. One of the benefits, however, of having an MMF account is that they are managed by professionals. They are managed by professional fund managers. And that professionalism is what's going to earn you, or is what's going to protect your funds, quote unquote, and earn you wealth or grow your wealth. So, as we have seen, it is beneficial to have an MMF account. It's crucial to have it in your diversified portfolio. In fact, it's a very, very good starting point. You can also use your MMF for wealth accumulation. You want to invest in treasury bonds, but you don't have the 50,000 shillings to invest in the bonds, given that that is the minimal amount to invest in any treasury bond. The bills you need 100,000 shillings. So if you don't have that account, the MMF will be a good place for you to accumulate your investment or accumulate your money, so that over time you are able to grow it to 50,000 shillings, and then you can now enter into the bond market. Okay, so MMFs are crucial investment vehicles. They are crucial accounts that you need to have in your portfolio if you are on a journey to financial freedom and financial independence. Have you subscribed to my channel? Kindly click the subscribe button, and if you like this video, give me a thumbs up and share the video so that YouTube can push it out to more people. Till next time, bye.